Good morning. We're looking at how global cues are aligning up in early trade today before the start of Indian indices. The key number here is the 9.1% inflation print that has come through in the US for the month of June. CPI print coming at 9.1%, and even core inflation has been quite high. Now, core inflation excludes both food as well as energy, and that has come in at 5.9%. So, clearly, a strong upward move with regard to inflation from that 8.6%, and even in terms of expectations, that's gone up quite sharply. The expectation suggested an 8.8% inflation print. Now that has come in at 9.1%. In fact, the upper band also was 9.1%. So clearly it's come at the upper band of what economists were projecting. And that puts pressure back on the Fed to start raising rates. So currently, the estimate that markets were working with was that Fed will raise the July rates by around 75 basis points. That's now starting to shift, or more likely to now be 100 basis points. That's a 1% rise in terms of the Fed rate. And that will of course impact markets as well as stocks. So we've seen all three US indices slip into the red. There was of course lots of pressure through the day on US markets. In fact, the Dow, which closed around 2/3% lower, around 200 points down, was actually 400 plus points lower at its lowest point yesterday, which clearly signifies that there was lots of pressure which ebbed off towards the end of the day. So there was a receding pressure that came through. When we're looking at the Nasdaq as well, it was down around 1.5% at its lowest point, but closed just 15 basis points. In fact, it was higher at some point of time through the day before closing around 1/5% lower. When we're looking at the S&P 500 as well, down around 0.5%. So all three US indices lower. When we're looking at markets in Europe, they were under pressure as well. In fact, all European indices, the Stock 600 as well as the DAX was down over 1%, and the FTSE, which is the UK index, down around 0.75% in trade yesterday. So we did see some amount of pressure in Europe as well. When it comes to Asia, Asian indices have opened up mixed in early trade today at least. So we're seeing the Nikkei hang on to around 0.7% of gain. So definitely a positive there. In fact, as we speak, pretty much all indices have turned green outside of the Korean index, which is the Kospi. The Kospi is down still 0.5% or thereabouts, but the ASX 200 up around 1/3%. The Shanghai also up around 1/10%, flat but positive nonetheless. And the Hang Seng is up around 1/5% as we speak. So clearly a bit of green coming through after all of the action on US markets. When we're looking at the US futures, they continue to be flat with a negative bias. So they continue to be lower in trade as we speak. The SGX Nifty also flat, negative bias, down around 1/10%. So we're seeing across the board there is a mild positive or mild negative at the moment. So that 9.1% inflation number not really bothering markets as much as one would typically expect. Moving quickly on to commodities. Oil prices continue to remain under pressure. Below that $97 a barrel mark is where crude is. Brent just about at the $100 a barrel mark, but that's going slightly up, so there's a positive trajectory there on the oil front. Moving to gold, gold continues to hover around that $1,725 an ounce mark, and that's where it's holding up. Pressure on gold will continue as the dollar index keeps going higher. So the dollar index has gone again above the 108 mark. It was just below the 108 mark. It's gone back up, and gold due to that will continue to remain under pressure as dollar will be treated as the safe haven and not really gold. Moving on to bonds. Bond yields continue to rise. At least yesterday it was above, the 10-year bond yield was above the 3% mark. It's come off those highs. It's now at the 2.96% mark, and the bond yield curve actually inverted yesterday as well. In fact, that was the biggest inversion in terms of the differential since 2000, again signaling a recession. So clearly some of those moving parts at play, reaffirming that there is a possible recession at play. Moving lastly to crypto. Well, cryptos gained sharply as is expected in a high inflation environment. Some investors losing some confidence on currencies, so they go to crypto for safety. Well, cryptos rose. In fact, Bitcoin was up around 4%, still clinging on to some of those gains, and is above the $20,000 mark, but way off that high that it clocked of $66,000 in over the last 12 months. That's the 12-month high that Bitcoin had made. So way off that, but nonetheless 4 to 5% gains for cryptos as well.